I called it, didn't I? I called the top on Bitcoin. As you can see, it went up further, as I said in the previous video, into the monthly FEG, and it rejected off of it, taking out the double top pattern that was over here, which I also said it would, as it is liquidity, right? And taking a look at the liquidation heat map, you can see that there is actually barely any liquidity left at the top area right here. If you remember correctly, there was about 700, 800 million plus dollars up above here. And now there's only what? 100, 100, 100, 100. It is barely significant compared to the previous high that we had over here, right? So, meaning this means that the market players have taken out the retailers who shorted around here. And now I believe that the price would hit down. Now, I will cover where I think price would hit to and in the end bottom. If I were to just go off of this bear flag pattern, right, there are two places of interest. The first place of interest would be right here, 36K level. The second place of interest would be here, the 58K level. So why I think that these two places are probable is because of the bull flag. It usually would drop this much, right? And if not, it would drop this much, take out the lows right here, and then proceed higher. Right? Another place of interest will be here, the liquidity level from the previous bull market bull flag, taking out the lows and then proceed higher. However, there is another school of thought that the bottom was already in February right here. Looking at the RSI. Looking at the RSI, you can see that it had entered oversold in February already. And the previous time this happened, price went up. See, oversold in the last bear market and price went up from there. However, I disagree with this school of thought because as you can see from the previous time, price actually came back down again, even though it had already went to oversold right here at the bottom and it created a bear flag pattern. And then price came back down, taking out the lows here, creating a sort of bullish divergence. It is a bullish divergence, in fact, before heading up. So from here, if I take into consideration these school of thoughts, I would take partials somewhere here, right? If you see how much did this drop by? This dropped by 12%. So if I were to measure 12% from the lows here, it would be somewhere here. Okay. Taking out this low, because this is kind of a liquidity level too. Taking out this low before heading up. So this would be the first place I'll take partials and set stop loss to break even so that I would have taken out my earnings already. So that even if price were to go up, I would not lose any money. There is a lot to think about, right? There is also the longer the consolidation, the bigger the continuation thought too. And as you can see, price has consolidated for since February for the past 3 months. So we could be seeing a significant drop as compared to the previous bear market bottom. As over here, it only consolidated for about 56 days, about 2 months, and the price dropped 12%. However, price has consolidated for 3 months here. So I highly doubt that price will only drop 12%. I do believe that it would drop at least to the 50K level before you will see a bottom and price going up. So what do you think If you agree or disagree with me, let me know in the comments below. Thank you and see you next time.